Good everyone, Les here from BG Trading and I hope you are well. Today is October 11th, 2023 and I want to analyze for you travel stocks. We're going to be talking about the leading Australian listed travel stocks starting with Qantas. Then we're going to go for Flight Centre, Corporate Travel Management and Webjet. They are all stocks that we have been trading since 2020 with our VIP members, and the reason I'm bringing them right now is obviously because we are seeing value across the whole sector in as it trades at technically discounted price. All of them are trading at technically discounted price. Let's take a look together which one of them has the highest chance or the best chart formation according to the current macroeconomic environment to move forward and potentially add it up another 20%, because that's what we're looking here in the channel, potential buying opportunities that will lead us to lock 20 to 40% within 1 to 3 month time. I'm going to go very briefly into the fundamentals of each of those companies and essentially just showing you quickly, if you haven't seen any video already, how you can very easily take a look at the levels of the risk you're taking by buying a potential stock. And I'm going to go each one of them for you right here in this video. So let's have a look. Just remember, this is not a financial advice, just from BG Trading sharing with you how we apply BGS 20 strategy to know when to buy and when to sell stocks together with our VIP members in order to chase 20 to 40% profit within 1 to 3 months lead time. That's the ideal situation. We've done extremely well in 2021, 2022, 2023 first half was good. Then the second half, because the market volatility is very high, we are a little bit struggle to achieve 20 to 40%. So we're going for higher quality companies and a narrower trading ranges rather than chasing 40%. We are happy to be able to lock in at this year 20% if we can. So that's all about this particular channel. So if you like, please subscribe and share this video with someone that you believe would be interested. And finally, just wanted to invite you to become a member of our free Facebook community, Buy, Grow, and Sell Strategy for Share Traders, which I'll be putting the details right in the description below. Let's kick off with Qantas, which the SX code is KAN. Qantas is Australian leading airlines company, the flagship airline company in Australia, and has over the last 3 months after the full year amazing report, the company has been taking a lot of bad press and investigation about potential misleading with customers and involvement with government in order to block competition, all sort of allegations, and that obviously reflect negatively on the stock price. In fact, the stock price, if we look at right here on Qantas, the stock price has fallen from $6.80, which is the highest, to $4.99, which essentially represents a big fall of a 27%, pretty much 28%, right as today $5, which is worth it. So this 28% fall represents the market pricing all those problems. Furthermore, we have crude oil moving towards $200 a barrel, which increases fuel prices. And we know if fuel prices increase, obviously the cost for those airlines also increase. Now, the ability they have to pass to customers those increments generally works pretty well. But obviously, if the competition starts to emerging back in Australia, then that's when we might see a little bit pressure on a net profit for the following year. And all this situation combined has led the stock to fall about 28%. Now, looking at, and this is where I always tell our viewers, if you don't want to understand about what's happening with the fundamental, that's fine. But at least go to asx.com.au. We're going to do this for every single stock that we're going to analyze today. Go type the code, which is KAN, Qantas, and pull it up the stock information about the company information, essentially. So then you can look here, all those information. And the one I want you to focus on is this right here at the middle. First of all, is the company generates any revenue? Which obviously it does. $19.8 billion revenue in FY23, which is a dramatic increase from the last 3 years, especially after COVID. And then the company has become net profitable again with $1.74 billion. Obviously, understanding where this net profitability comes from, it's critical, it's essential. But what you need to look at as well now, as the third question after whether the company generate revenue and whether the company is a net profitable company. The third question is, what is the outlook for the following 12 months, for, in this case, for FY24? And understanding, obviously, there's no guarantees. We don't know exactly what's going to happen with the travel sector, but you need to know, you need to understand what's happening with the company behind the scenes. And obviously, there will be a little bit pressure, and therefore, airline companies never been really my favorite type of stocks, although there is room for trading. But we could see potentially the share price staying around the current level until we see all those allegations and those problems with the management of the company being, and the image of the company being sorted out. But having said that, the stock price is currently trading at what we call technically discounted price right here at this support, hypothetical support level. It has room to fall further for sure. So we want to draw here is another support level right around here at the low $4, around $4.30, pretty much. So if I was going to look buying this stock, I would potentially chase buying there around this sort of level, and I'm going to even highlight right here for you, which is under $4.50. Okay, although $5 looks good, you can see the RSI, which is one of our indicators, still looks very, very weak, doesn't look very appealing. So this is still a little bit not very clear, and therefore makes me wonder whether the share price could fall towards to this level. So which, on my particular opinion, yes, it could fall further, and that would represent, if you buy now, would represent another 15% potential loss. Now, if I was going to trade this stock right now, what I was going to do is I just going to, let's say I would buy right now. I'm not going to trade this particularly, but if I was going to, I would buy now and I would set up stop loss right under this level here, and preferable under $4, which brings to $21 range. It's a very huge range, a big risk for that now. And even if we go under this level, we're still about 14% loss, which is a little bit more acceptable. But let's take a look what the upside is about. The upside is 30%, which is good, okay? The only problem is there's a lot of things going on with Qantas at the moment, and honestly, to see the stock price bounces back right to this level in the short term, I struggle to believe that's going to happen. So I would rather wait for an opportunity of this particular stock going towards to this level, and then I'll buy for 20%, which would bring me the target around $5.50, which still would give me 28% profit, which is well above our threshold profits in at BGS 20 strategy. So ideally for me, it would be buying Qantas around $4.50 if I was risky a potential entry on that stock. At the moment, I was just watching, not interested buying Qantas for the reason I'm just spoken. So next stock is Flycenter, which the SX code is FLT. This is also a stock that offer a really good trading opportunity, and unlike Qantas, it is in the travel sector, but it's not an airline company. It's a travel company which does provide the travel services for customers. And this company has also turned around its fundamentals since COVID. And this is a classic example of a very good turnaround in fundamentals. Take a look here. And again, we make ourselves the same questions. Does the company generate revenue? Yes, it does. And the revenue has been increasing year on year. That's a tick there. And then is the company net profitable? Yes, it is on FY23. Still very short profit, $400 million profit. But if you can see, the net losses has been decreasing since COVID and then became profitable in FY23. So yes, profitable. And the outlook, what's the outlook for FY24? It's even better. We don't know exactly what's going to happen, but the guidance shows a positive outlook with still some headwinds, but positive outlook as global economy is still very resilient despite high inflationary environment. So it's good for travel at the moment is still. So what we want to look at now, back to this. So fundamentals, we have ticks. Again, like this is high-level analysis on the fundamentals. You need to dig into the reports and everything, but at least if you do that, you know what you are buying, the risks, at least not buying something that has no revenue or no profit at all. So you know the companies, you are buying something that is turning around right now as we speak. So if you go to the daily chart here, the RSI looks interesting. Obviously, you don't have much of a buying, but we have a change of momentum right there. And we have what we call bullish intersection level 2 with this green candle on the Hekenach. And we could have something like this going on. So anytime you want to look at attempts to buy some a particular stock, you got to look at where the RSI is looking positive. In this case, it's just a little bit too short for us to say that this is a bullish divergence. We like to have at least 6 months of trading range, but looking this way, it doesn't look too bad, to be honest. And the share price, bullish intersection level 1, green candle on the Hekenach, and has just bounced out of the long-term moving average. So if you're buying this now, it means that you are buying a technically discounted price for the short term, but at the technically fair price for the long term, which high quality companies is still not bad. The trading range here would be only 18%, okay? Only 18%. Which means if we're going to trade this, I would aim for an exit at around $23.40, which is the latest high, provided the fundamentals are now better than it was last year. However, if you look for the ultimate entry point, you think there is a little bit more room to fall, but we're not sure if it's gonna fall, because last time we predicted this is going to fall further, and then went high, went right end up to this higher high that right there. So it's still in ascendant trends according to this chart formation and according to SMA to the long-term moving average, which shows a very constructive movement right there. So it could come down to $16.20, but it looks more that is heading towards to the upside as we speak according to this chart formation. So for me, Fly Center is a buy, but I wouldn't put all my coins into all those travel stocks together. I would pick at least at one or two stocks, no more than 2 stocks on the sector, because we still could see a further a leg down, depending on how volatility in the markets, if the volatility in the market stays, so we could see another leg down. But if not, obviously we could see those stocks going towards $24 and even make 20%. So for me, is a buy opportunity right there according to the technicals with strong fundamentals at the current levels. Fly Center. Now let's move to Webjet, which this X code is WEB. This is another travel stock. Okay. Last time that we analyzed this stock, we thought that Webjet would come down to these levels that is actually trading right now, but went up going up. So this bearish intersection there failed, and then we had a bullish intersection right there that suggests us that the stock price was bouncing back. So obviously we had to avoid that particular assumption. But we did not trade Webjet since 2021. We haven't traded Webjet since 2021. We've been sticking with Flight Centre Corporate Travel Management, which is the next stock. So this looks a little bit weaker than Flight Centre. The fundamentals still shows a turnaround as well as Flight Centre, as you can see right there. Obviously, it's a much smaller company where Flight Centre was posting a revenue of $2.2 billion. Webjet only posting revenue of $364 million, which is way lower, and only $14 million net profit, but it's still a very similar turnaround compared to Flight Centre. So I would say that you can pick any of those two, but Flight Centre tends to move in a wider trading range, at least for the last 2 years. But looks like look, a very similar sort of fall, about 20%. So 1950. Flight Centre fell 20%, whereas Webjet has fallen about 1942%. Would I buy Webjet now? I probably would stick with Flight Centre at this stage, just because it's a global business, and Webjet still a little bit struggle with some of its operation, and Flight Centre has recently bought a luxury high-end travel business as well, and that could means further diversification in its portfolio as well. At the moment, it's trading at hypothetical support level of $6.50. If you was to buy the stock right now, I would be buying with a trading stop right under $6, which gives a good opportunity as well, like pretty much giving or taking 7% loss for what could be about 22% profit. Yeah, unless obviously we have something like this, which looks more, because this is another problem here we have. It's a lower low. So when you have a lower low, it looks like there is a change of the trend. Okay, the long-term trend is still up, but the short-term trend has changed a little bit. So we might have the stock moving sideways for a little while. If you move sideways, I would only be chasing. I wouldn't chasing this high level here. I would probably chase around for a target right there. I would be this is high level analysis again, guys. Obviously, you need to go in detail. This is not a stock that we go in detail. So I would be chasing about $7.40 as a target exit, just under $7.50. Exit, make the money, and move. So it's still about 16% sort of safer range, 15% safer range for 7% potential loss. So but again, it looks weaker. Let's see what relative strength tell us here. It looks weaker than Flight Centre for sure. So I would be sticking with Flight Centre as we speak, for the reason of just being analyzing. So I would probably leave Qantas and Webjet out of my potential buying list, and would stick with Flight Centre. But overall, they all offering reasonably good opportunity. You can even pick 2 of those 4 that we're analyzing, but I wouldn't pick all those 4 stocks, because you'll be fully exposed to travel sector. And we have to diversify. Diversification is key as well to mitigate risk. So last one is Corporate Travel Management. This is a stock that has done very well during COVID. The management has made the company to keep its margins, and the company hasn't had to raise capital as Flight Centre and Webjet did. So we didn't see any dilution, and therefore we saw the stock outperform the other 2 for their reason. You see, like COVID, the stock outperformed. Corporate Travel Management went down to $4.70 and all the way up to incredibly $26. There was huge rally. Now, the company fundamentals, if you look at it the same way, is still better than Webjet, and I would say has growth better than Flight Centre as well. Obviously, it's smaller market capitalization, but it's still less risk than Webjet. and probably better management, and even paid dividends, which we haven't seen that in Fly Center, and we haven't seen that Webjet, and we haven't seen that in Qantas. So paying dividends, it's important. So a big tick for corporate travel management, as it trades right now at technically discounted price. And if you go to weekly chart right there, we have this potential bullish engulfing here. Obviously, you want to wait for the end of the week, and hopefully if you see the end of at the end of the week on Friday, if we see this green candle all the way up here, so we're engulfing the red candle that we saw the week before, then there is a big buy signal on a weekly chart. So if you go to the daily chart, the daily chart shows us, let me just take this out of the way, yeah. The daily chart shows us as well a potential reversal. However, we still could see the stock trying those $14 range. But the RSI on a weekly chart looks very constructive right there. Very constructive. And if you go to the daily chart as well, it looks better, looks far better than Fly Center, and also looks far better than Webjet. So it looks good. This is obviously our leading pick on the travel sector. So if he's going to trade those travel stocks, I would go for the corporate travel management rather than the other two stocks. The trading range still around 20 to 25%, which is good, pretty much what we're looking for here at BG Trade. So corporate travel management is our best pick in the sector, followed by Fly Center. Hope this video was valuable for you. Let us know what you think about travel stocks, which one did you pick up if you could. And if you have any questions, please put it in the comments below. Thank you very much for watching till the end. And remember that we are now running $7 for 7 days trial on our VIP membership. So you can try see how we operate with our VIP members for only $7. We stay 7 days in our VIP groups. And then if you don't like, you can just cancel your subscription. But if you like, you can just keep going, especially now the market's moving towards a potential rally at the end of the year and potentially early 2024. Hope that is a good opportunity for you to try out our services. Thank you very much for watching to the end. I'll see you in the next video. Bye.